please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But let's focus on some individual stocks then. The Britannia stock, that's at a record high. That's seen a jump of 30% in 2018. And so far, in the last 12 months, it's rallied about 67% in an otherwise weak market. What is driving the stock and what is the outlook for FY19? Varun Berry, the managing director of Britannia, now joins us on the telephone line. Mr. Berry, good afternoon. I'll come to your company specifics in just a bit, but, you know, we've almost completed that 1 year of GST implementation. So my first question to you on exactly that. How has 1 year been? We spoke with Mr. Mariwala this morning, and he said that on ground, the disruptions are almost over. What's the feedback that you're getting, sir?
Similar. I think we've seen the government being very, very proactive. So the GST Council has been extremely proactive. In any issues that come up, they react very, very quickly and get these solutions solved in a very practical way. So I think that's moving quite well. The buoyancy in the tax collection obviously is showing that the last 2 quarters have been fairly good in terms of compliance. Even our business growths have been definitely better than what they were earlier. So things are moving in the right direction. I think GST has definitely simplified the entire indirect tax process. And, I think that this obviously is the very initial stage, the first year. And for the first year, I think it's been great performance.
All right, Mr. Berry, so that's about GST. Let's talk about Britannia then. You know, Q4 looked good. Double-digit volume growth is what we saw. What's the outlook for FY19? Can we expect a double-digit volume growth?
We don't give any outlook, so I'm sorry to disappoint you. But as I said, the momentum is coming back slowly, and we are hoping that it continues. Leading up to the election year, hopefully we will be able to see some more momentum as we go forward.
Well, Mr. Berry, this is Mangalam here. I understand you don't give any outlook, but if we take a look at the first half last year, you had 3% volume growth, you had 5.8% volume growth, so we're working with a low base. First half at least, double digit is a possibility. Can one expect that?
Mangalam, it's something as a policy we don't give any outlook, and I think it's not right to. I don't think I'm gonna fall for that.
All right, so let's. In that case, we'll try talk about the demand scenario. How has demand panned out so far? Urban, how much does that account for in your revenue? Rural, how much does that account for in your total revenue? What is the demand growth that you're seeing in both these segments?
So the demand growth has been reasonably good. I would say not a big change from what it was, but we've seen about a 200-250 point increase in overall industry growths. So from that perspective, still single digit. It's not like a double-digit industry growth, and we certainly are waiting for that time when the industry overall starts to look at a double-digit growth. But definitely a move in the right direction.
All right, let's talk about the margin picture then, Mr. Berry. You know, margins have been improving. Q4 was very, very good. I don't think we're going to get a number from you in terms of a guidance. But FY18, I think around 200-220 crores of cost savings was something that Britannia could do. For FY19, are you expecting to do a repeat of that sort? And can you hold on to these kind of margins that you've delivered in the past year?
So cost savings is now a part of our culture, and just to let you know that these cost savings are never counted again, right? So whatever cost savings that we've done last year, the clock starts on the first day of the year and ends on the last day of the year, and anything that is over and above that is counted in our cost savings. So it's a very stringent way of looking at costs, and yes, we are looking at our budget is a higher number than what we did last year.
Okay.
So certainly we are looking at areas of cost savings.
Last year was 220 crores approximately?
Yes.
Okay. All right. So this year you're looking at maintaining that or maybe doing a tad bit better, right? So we could expect a saving of around 220 to 250 crores?
Yes.
All right.
Okay. Mr. Berry, another question for the year ahead then. How are you looking at the kind of increasing competition coming in from the likes of, say, what ITC's new launches, there's Platina from Parley, etc. Is there any sort of further augmentation of your ad strategy or, new launches, etc.? What do you have in mind?
Well, yes, we've got a fairly good innovation pipeline, and it's actually, we've started to get ready for some of the big launches. And you will see a lot from our portfolio. There's going to be a lot of addition to what we do in terms of in every segment. So we are looking at, as you're aware of, the entire croissant launch is also in November. So, and similarly in biscuits, cake, rusk, some other categories that we are looking at, this year is going to be a very, very exciting year for Britannia.
So, in the remainder of this year, Varun, what are the products which are due for launch? What is the timeline? And the dairy business, that is something that the street is pretty excited about as well. So, when can we see the first rollout of that dairy product?
The dairy product will not happen this year for sure, because we are in the process of it's a slightly longer lead time, because you've got to get the milk collection piece sorted out, and then you've got to do the milk processing piece. So that's going to be at least a 18 to 24 month project. So that won't happen this year. There will be innovations in dairy, not from our plant, but certainly innovations from dairy. But there are going to be some new-to-market products in biscuits. There are going to be some new-to-market products in cakes. And similarly, there are going to be some very exciting products outside of the categories that we operate in. So I can't talk about that right now, but you'll see it towards the end of the last quarter of this year.
All right, so the last couple of launches that you did, the likes of Good Day Wonder Fills, you did Deuce, which has been pretty tasty, to be very honest. There were the Treat Cream biscuits as well, the relaunch out there. How much does that account for in your revenue? And going forward, the new launches, how important would be in your overall scheme of things? What kind of salience do you expect from new launches coming into your overall scheme of things?
So the innovation target that we have is about 5% of our revenue. So that's what our entire innovation portfolio adds to our total revenue. And we have been, fairly close to that for the last year as well. So we are hoping that we'll be able to achieve and maybe overachieve that in the current financial year.
All right. A word on increasing distribution. Over the last 4 years, your distribution has grown about 2.5 times, from close to 7.3 million outlets to about 18.5 million outlets. Where does that target go in this year, 2 years from now?
So as we speak, it's about 19.
Okay.
So we are continuously adding outlets and making sure that our distribution goes wider, especially in our weak areas, which is the Hindi belt. So that will continue, I think, till we get to about 2.5 million outlets. I think the pace will be fairly good in the next 2 or 3 years. After that, we'll have to consider, how fast or how do we get to these outlets, the rest of the outlets. So that's the time when we'll start to take some different measures. But the next 2 to 3 years, the pace is going to continue.
All right, Mr. Berry, I remember in your last con call, you were talking about premiumization as well as innovation, and FY19 is going to be a benchmark here. So let's keep that aside for the time being. Let's talk about the international business then. It contributes roughly around 15% to the total revenues out there. What's the opportunity? How much does it contribute?
No, it contributes about 7% of the revenue.
7% as of now. All right. What's the opportunity out there? Are you seeing a faster growth out there? Are you looking at some kind of acquisitions? Could that be a possibility in the international market?
It certainly could be a possibility, but it's not the only strategy that we are looking at. The growths in the international market have not been as fast as our domestic growths in the last couple of years. The reason for that is that a bulk of our international business is out of the Middle East, which certainly is a troubled geography, and troubled because of certain countries completely shutting down, etc., right? So, but we are opening out some markets, and the highlight is that we've opened up Nepal, which we are putting up a plant in as we speak. And, despite having no manufacturing facility, just from exports, we've become market leaders in that country. And it's a large business. It's not like a small business. And we are hoping that once we have a facility there, once we have a manufacturing facility, we can scale that country up and make it, a larger business for us. Similarly, there are other markets that we are looking at. Obviously, exports is something that we are growing pretty rapidly, especially Southeast Asia, even Australia. Our growths have been fairly good, fairly robust. Even the Americas, North America, Canada, our growths have been fairly robust. But now we are looking at how do we set up businesses by having a full-fledged manufacturing operation in some critical markets where we have a right to succeed.
Right, Varun, before we let you go, since the time you've joined, about 7.5 times growth in the company's market cap. You've been good for the promoters. Are they looking to sell stake in the company?
No, they are not. Let me be categorical about that.
All right.
Okay, all right. Thanks so much, Mr. Berry, for stopping by and giving us all those details. All the best for the remainder of this year.